Hi, in this video we're just going to further elaborate on some price action analysis on FX charts to follow on from the trend lines we previously looked at. We're going to speak about support and resistance. This is definitely one of my most preferred technical tools when analysing price action, and we see that price tends to respect key levels repetitively, which gives us an insight as to potential slowdown areas when trying to pick off entries and exits. Support levels are where demand is perceived to be strong enough to prevent the price from further falling, whilst resistance levels are prices where selling is thought to be strong enough to prevent prices from rising higher. Both support and resistance levels are psychologically important levels where a lot of buyers and sellers are willing to trade. They tend to be held at whole numbers, and it's something that we want to keep an eye on as much as possible. When these lines are broken, the market psychology shifts and new levels of support and resistance are established. I have my euro-dollar 1 hour chart opened here, and I'm going to try and plot some key levels of where price is being respected. As I drag this line downwards, I may consider this a level of resistance. As you can see here, price comes up and tests this price level, drops back down, and again comes back up to test the same level. This would be considered an area of resistance. Eventually, price breaks through my resistance level, and that key point then turns into a level of support as price comes down and respects it at the same point which was once our resistance. In summary, when price passes through resistance, that resistance could potentially become support and vice versa. I generally look for 3 or 4 touches to confirm a key level. However, the more often price tests a level of resistance or support without breaking it, the stronger that area is. When a support or resistance level breaks, as demonstrated here, the strength of the follow-through move depends on how strongly the support and resistance had been holding in the first place. False breakouts are common, and so to help you filter these out, it's advisable to think of support and resistance levels more as zones rather than concrete numbers. For me to highlight a zone, I can very simply go to Insert, Shapes, and go to Rectangle and highlight an entire area where I may be focusing on. And as I just drag this rectangled area down, I can highlight this area of resistance, which covers that area of support, which sort of demonstrates to me that I'm going to be mainly focused at what's happening to price when it falls within this region. One way to help you find these zones is to plot support and resistance on a line chart rather than a candlestick chart. As you can see, our price action is displayed as candlesticks. If we were to flip to this icon here, it will be displayed as a simple line chart. The reason for that is that line charts only show you the closing price, whilst candlesticks add the extreme highs and lows to the picture. So it simplifies your technical analysis. And once you've drawn in your levels, something similar to this, you can then always flip back to your candlestick charts to see where the line has been placed.